Anker Protocol takes a hit as a hacker mints billions of tokens, and Sam Bankman-Fried admits to this on a Twitter space. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Be sure to follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. And don't forget, for our limited time, our Altcoin Buzz Access group is free. And while it is, you can get our great weekly market and NFT update reports from our amazing research team. Check them out for free now. The link is in the description. Now, let's get into the news. Bitcoin fell over 16% in November, spending most of its time under 17K. Mining revenues fell 20% in November to about $472 million, while having the highest amount of miner outflows in 6 months. However, now that many have capitulated, only 22% of all mined Bitcoin is liquid, moving around and exchanging hands. 78% of Bitcoin's total circulating supply is illiquid, showing investors have been pulling their digital assets away from exchanges and storing them in cold wallets to avoid selling them. Illiquid supply is a vital crypto dataset as it implies only a few weak hands can sell their holdings and exert bearish pressure. While a whopping 15 million Bitcoin are not available for sale, only 4.3 million Bitcoin will be in constant circulation and in the highly liquid category. A large majority of these coins are held by either short-term investors or traders, thus positioning Bitcoin's supply shock at the same level as when it was priced at 53K, which implies short-term holders have lost to long-term holders. Ankr, a decentralized blockchain infrastructure provider, was the target of a significant exploit last night. Early information indicates the hacker has generated trillions of Ankr reward-bearing staked BNB. Earlier, the BNB chain had used Ankr to introduce the liquid staking feature. By signing BNB tokens to the liquid staking agreement and acquiring a BNBC, users were able to earn interest. The price of a BNBC has fallen 99.5% since the exploit. The deployer's private key was likely made public during an upgrade, giving the attacker access to deployer privileges and the ability to change the contract. The attacker then used the function mint approved to, decompiling the data, making it possible for anyone to mint tokens. The Ankr exploiter had transferred 900 BNB worth about 253,000 into Tornado Cash. He had also bridged USDC and ETH to Ethereum. The exploiter currently holds 3,000 ETH, around $3.8 million, and 500,000 USDC. PeckShield also reported that copycat exploits were occurring as others took advantage of the vulnerability. One user bought 10 BNB or about $3,000 worth of the now dumped ABNBC. He was then able to take the 183,000 ABNBC to Helio Protocol, where the price of ABNBC was not updated. With that, he could then use it as collateral and borrow 16 million Hay, which he was able to sell and get 15.5 million BUSD, meaning he was able to turn 3K into 15.5 million. Binance CEO CZ said there were possible hacks on Ankr and Hay, and that Binance has paused withdrawals for a little as the hackers moved 3 million to Binance's exchange. Ankr said they will take a snapshot from before the hack and reissue Ankr BNB to all holders who had it before the exploit, while also buying $5 million worth of BNB to compensate liquidity providers that were affected. Polygon announces that Graph Protocol will be adding support for Polygon on the Graph network. The Graph is a protocol for indexing and querying blockchain data. The Graph network will make it possible for Polygon developers to locate the information required to increase the effectiveness of their dApps. In order to support the decentralized apps operating on the network, Polygon node operators can contribute by acting as indexers for Polygon. The indexers are compensated with incentives and query fees. Polygon also recently stood out on DeFi Llama as the ecosystem with the most new DeFi protocols listed. As we know, a large part of the reason FTX collapsed when it did was due to the CoinDesk article about Alameda's leaked financials, and Binance's CZ tweeting that they would be selling their large FTT position after news came to light for them. Many argue CZ caused the collapse of FTX, including Sam Bankman-Fried. In a Reddit thread CZ posted yesterday saying, "Interesting thread," it links to an article about FTX where Sam had said FTX's situation would be in a lot more stable position had CZ not expressed concerns about its balance sheet before pledging to dump more than $500 million in FTT. Reddit users commenting on this thread saying, "If a single tweet can destroy your company, there's something very wrong." It seems Sam has started to make the rounds doing interviews as he was in a Twitter space last night where he was asked if the spot and futures wallets were co-mingled. Sam says in general, balances were treated as fungible, meaning they were all essentially the same and could be pooled together. Lots of the funds were initially sent to Alameda, and then Alameda sent them to FTX. He explains that the whole thing is very confusing, so it's hard to know whose money was where. New York Times, Good Morning America, and so many crypto influencers are interviewing Sam Bankman-Fried, but no one has gotten any decent answers. If you guys could ask Sam 2 questions, what would you ask him? One area that brings the most utility and added value to NFTs is the phygital sector. This is the mix of physical, real-world products and NFTs for both a real and virtual experience. TSS, or the Sneakerhead Society, is a phygital project that blends JPEGs of bored apes with the practicality of real-life shoes and clothing products. The society that makes up TSS is a member-only club of 4,444 people. Targeting those that like to show off their kicks, the TSS collection sold out in only 90 minutes back in September. Being a member of TSS means you get access to new collections, airdrops, events, and physical drops of shoes as well. They're currently hosting a raffle that ends on December 14th to win $500 worth of shoes, including Jordans and Yeezys. This is the first we've seen where the NFT has more value than just holding a physical item, and it looks like this is the future of where phygital is going. Chainlink Staking V1 will go live on the mainnet on December 6. Originally, a lock-in period of 12 to 24 months was planned based on a conservative release cycle. However, after discussions with a number of community members and node operators, it's now clear that a faster iteration will be the final solution. The next version of Staking V2 is now scheduled for a release in 9 to 12 months. At that time, stakers from V1 will be able to unlock or migrate their staked link and rewards for the first time. On December 6th, only a few addresses will initially be eligible for staking. They will be able to stake up to 7,000 link worth about $53,000 in capped staking pool. On December 8th, the staking pool will be open to all. There will be an initial cap on the pool of 25 million link. As staking reduces the supply of liquid link, it could be a potential price catalyst, boosting the Chainlink price out of its 7-month range. So be sure to closely watch Link's performance over the next 2 weeks. Payment processor Stripe just introduced a customizable and embedded fiat to crypto on-ramp for Web3 apps. This lets customers instantly buy crypto in an on-ramp that matches the brand, while Stripe handles KYC, fraud, and disputes. With this integration, 11 of the 16 projects in the program are built on Solana. Coinbase Wallet just came out with a Twitter thread yesterday claiming that users on Apple's iOS may not be able to send NFTs on Coinbase Wallet anymore due to Apple's systems. Apple has been notoriously blocking crypto and NFT apps from working properly in recent months, as Apple claims the gas fees required to send NFTs need to be paid through their in-app purchase system, so that they can collect 30% of the gas fee. Coinbase goes on to say, for anyone who understands how NFTs and blockchains work, this is clearly not possible. This is like Apple trying to take a cut of fees for every email that gets sent over the internet. If you hold an NFT in a wallet on an iPhone, Apple just made it a lot harder to transfer the NFT to other wallets. What do you guys think? Will Apple make a concession for this? That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.